Welcome to the Money Hour with Tina Mitchell. Tina Mitchell, MLO 145420, is a licensed loan originator with Gateway Mortgage Group, LLC. The views expressed by the speakers on the following program are those of the speakers and do not necessarily reflect the views of Gateway Mortgage Group, LLC, nor are they necessarily endorsed by Gateway Mortgage Group, LLC. Now, in the studio, local mortgage and finance expert, Tina Mitchell.
Welcome to the Money Hour on 1150 AM KKNW, the Saturday, June 17th show. I am your host and mortgage expert, Tina Mitchell. Each week I share expert advice and inside knowledge on how today's events in our local economy can affect your money. If you're hearing my show at a different time or day, you are listening to a rebroadcast. I'm here to answer any questions or connect you with the guests that I have on the show today. Please call at 1-855-400-1150. Again, that's 1-855-400-1150 or online at themoneyhour.com. And my lineup for the show today, Kim Frazier with John L. Scott. Some like it hot. Today's hot real estate market will be a great conversation. Also in studio, I have Dennis Yamasaki with Affirmative Financial Services, business succession planning using life and disability insurance. And last guest in studio, Dr. Kabran Chapnik with Amen Clinic Northwest, investing in brain health and how it can improve your health of your finances. Great information and great guest in studio. For more information on any topics discussed, please call the show at 1-855-400-1150. Again, that's 1-855-400-1150 or online at themoneyhour.com. And let's start out the show, as always, with a little money chat.
Money.
CNBC Diane Olick put out a report that said home price declined ever so slightly from 7.1% to 6.9% on a year-over-year basis. Obviously, this number is volatile, but the forecast from CoreLogic over the next year actually improved from 4.9% to 5.1%. So this is the truth behind the housing market. In housing news, the June National Association Home Builders Housing Market Index, which measures builders' confidence, dropped 2 points from 69 to 67. This was 3 points lower than expectations. Last month's number was also revised lower from 70 to 69. And looking at the internals of report, current sales conditions dropped 2 points to 73. Sales expectation dropped 2 points from 76, and buyer traffic fell 2 points to 49. Although this was a slight drop from last month, it is still a solid number. Anything above 50 is considered positive. Granger McDonald, the National Association Home Builders Chairman, said that builders' confidence levels have remained consistently sound this year, reflecting the ongoing gradual recovery of the housing market. Wednesday, the Fed hike and Fed funds rate raised by 0.25% as we expected, but they also gave some clarity to their plan to reduce their balance sheet. The Fed is going to allow $4 billion per month in mortgage bonds and $6 billion of treasuries to roll over off their balance sheet each month, which in increments of the same amount each quarter until reaching $20 to $30 billion respectively. The Fed said that they would still like to hike one more time this year, but it's depending on the data, so it'll be interesting to see what happens. They also said that they want to start reducing their balance sheet this year, but did not specify if it would be in September or the December Fed meeting. Overall, this was a gentle way for the Fed to unwind its balance sheet, and the market seems to be taking it in stride. Initial job claims for the week ended 6/10 was released. Initial job claims, which measures individual filing for unemployment benefits for the first time, were reported at 237,000 for last week. This represents a drop of 8,000 from the previous report, which was unrevised at 254,000. The wholesale inflation for the Producer Price Index, PPI, was released. The headline PPI figure was unchanged and was lower than expectations of 0.1%. On a year-over-year basis, PPI moved slightly lower from 2.5 to 2.4, and the core PPI, which stripes out food and energy prices, was hotter than expectations and increased from 1.9 to 2.1 on a year-over-year basis, which is the highest level in 5 years. Even though the producer inflation does not always translate to the consumer, the trajectory of increase was noteworthy. The Consumer Price Index, CPI, which measures inflation on the consumer level, was released. Headline CPI decreased by 0.1% and moved down from 2.2 to 1.9% on a year-over-year basis. The core CPI rate, which stripes out Food and energy prices rose by 0.1% on a month-over-month basis, and the year-over-year rate also dropped from 1.9 to 1.7. Overall, inflation did moderate in this most recent report, unlike the Producer Price Index report. Within the report, energy prices fell sharply to reflect the lower oil prices. Gas prices dropped 6.4%, and medical care prices slowed to a 2.7 year-over-year increase, and rents rose by nearly 4% year-over-year. Retail sales May dropped by 0.3%, which was weaker than the 0.1% gain expected, and the control group, which stripes out auto, gas, and building materials, was unchanged, which was also higher than the 0.3 gains expected. Core retail sales are up 2.9% year-over-year, which is back below the 5-year average of 3.3. A little bit of data shared with you today in the Money Chat. And coming up next on the Money Hour, some like it hot, today's hot real estate market. I have Kim Frazier with John L. Scott right here at 1150 AM KKNW after this short break.
Are you tired of wasting your hard-earned dollars on rent to pay off someone else's home and at the same time losing out on the tax benefits in the process? Kim Frazier with John L. Scott has assisted over 800 individuals and families just like yours in obtaining the dream of home ownership. Kim has been practicing real estate since 2002 and is recognized in the top 1% of all real estate brokers. Kim is well equipped to assist you whether you are a first-time buyer or a move-up buyer looking to achieve your real estate goals.
Hi, I'm Kim Frazier, and I would love to assist you with your real estate needs. Please feel free to call me at 425-209-5638, or you can find me online at KimberlyFrazier.com.
How did you feel when your retirement funds shrunk during the 2008 recession and the dot-com recession? Are you concerned that you won't have enough money for retirement? How about funding your long-term care needs? When the next recession comes, will you be satisfied with your current investment strategies? Dennis Yamasaki from Affirmative Financial Services helps friendly people realize a better lifestyle in their retirement. By offering a recession-proofing program that has offensive strategies, providing competitive growth during market upswings, and defensive strategies that provide downside protection in market downswings, you'll have steadier gains, less stress, and more security during your retirement. Future returns cannot be promised, and there is always a risk to lose money in bond and stock market instruments. To learn more, call Dennis today at Affirmative Financial Services, 206-817-5239.
Hi, this is Dennis Yamasaki from Affirmative Financial Services. If you'd like to contact me about recession-proofing your retirement funds, please give me a call at 206-817-5239.
You're listening to The Money Hour with your host, Tina Mitchell, on Alternative Talk, AM 1150. Now, back to the show with local mortgage and finance expert, Tina Mitchell.
Welcome back to the Money Hour with your host and mortgage expert Tina Mitchell right here at 1150 AM KKNW, the Saturday, June 17th show. I've built a network of elite industry professionals, each week sharing their knowledge and expertise to my listeners. If you're hearing my show at a different time or day, you are listening to a rebroadcast, but you can call the show at 1-855-400-1150 to connect with the guests I have in studio today, or you can go online to themoneyhour.com. In studio right now, Kim Frazier with John L. Scott. Some like it hot. Today's hot real estate market is the conversation I'm having with Kim. Kim, thank you so much for coming back in studio.
Thank you for having me.
And a little bit about Kim. Kim Frazier is local realtor who works at John L. Scott in downtown Bellevue. Kim has just celebrated her 15th year with John L. Scott and is in the top 1% of all brokers within John L. Scott. She has sold over 900 homes in her career and loves helping people with their real estate needs. She has also earned credentials as a accredited staging professional as well as certified luxury home marketing specialist. And I know it is a hot topic with the hot real estate market that we're having, and it's crazy out there. So let's start out with I'd like to hear what's going on in the different areas and how it compares with where we're at. So how does Seattle and East Side market stack up with the national level in regards to sales activity?
Well, it was interesting when I was hearing your statistics on a national perspective with CoreLogic versus the local market here. I think because of our strong job sector and job market in the east side and the Seattle market, our numbers are much, much higher as far as growth and appreciation. We've been averaging between, conservatively on the east side in Seattle, 10 to 12% annual appreciation year over year from last year to this year. And I don't see that trend, unfortunately, slowing down anytime soon.
So how about the Seattle East Side market stacked up to the national level in regards to price? Because a lot of people are like, this, it's just impossible price-wise to get into a home.
Pretty much. I would say probably national average price is probably $250, $275 on a national average. Seattle and East Side, median price is probably between $700 and $800 for
Which
a median
seems expensive,
price home.
but we've all heard, you hear we're the next Bay Area, and you look at the Bay Area comparison to where we're at here, and I heard someone say that we're like 10 years behind where the Bay Area is at, or read something about that, and that's just crazy if you really look at perspective of where, just like you mentioned with employment and what's happening with that here in our local market.
Yeah, I don't see any end in sight anytime soon.
Yeah, it's crazy. So what about the average sales price nationally versus Seattle and East Side?
I would say it's easily double, if not triple, the national average. Seattle, the last 6 to 12 months has been the hottest housing market in the country. We have the largest shortage of inventory of all homes in the country as well, which creates that bidding war that we're seeing that we'll talk about a little bit later here in the segment. And so it's just prices are strong, inventory is low, job market's hot, unemployment numbers are low here. Anybody who doesn't want to have an hour to commute and be close to the job centers, unfortunately, that just drives the price up, in addition to the international buyers that are still buying in our marketplace that are also driving the prices up.
Yeah. So what about the Pierce and Snohomish counties?
Still strong. Obviously, I would say probably 25 to 30% less expensive than what we're going to see in Seattle on the east side. Bothell, different parts of Bothell, Linwood, with the better schools, Edmonds School District or North Shore are going to command a little bit higher price, and be those in like the Everett School District. The ones that have higher test scores are going to, price out a little bit higher. South End, even in the Puyallup, Auburn, Bonnie Lake, Lake Taps, Federal Way, Auburn, you're seeing multiple offers, shortage of inventory on those. Prices easily 5 to 10% above list price, both in Pierce and Snohomish County, and up to 25% at times above list price in Seattle and the east side.
It's crazy. So, and talking about Bothell, because they've got a lot of amazing stuff going there. What do you think is going to happen with the Bothell market, like, let's say, in the next few years?
I think it's going to stay strong as long as, they can keep building.
Yes.
You have only so much land available, so it'll just continue to push farther north and push farther south as the land avails itself. A lot of people can't afford to live in the east side or Bellevue, Kirkland, Redmond, and they work in Seattle or east side, and so they'll make that gradual progression up north. But also down south, like in the Pierce County market, I just read an article in the News Tribune last week that the Spanaway, South Hill, Frederickson area, they're looking in the next 13 years, by 2030, they're going to have 60,000 more people living on South Hill of Puyallup, which
Unbelievable.
Is going to be a traffic nightmare.
Yeah, geez. So how does the Seattle East Side compare to the national level in regards to inventory? I know you mentioned about our that I didn't realize that we were actually the lowest as far as what our inventory is.
We have a huge inventory shortage. It's the last couple months we've seen a better uptick of inventory. Currently, I have about 20 properties pending right now, about half of them listings, half of them buyers, which is good. First quarter was tough. There was just nothing to sell people. And so supply and demand, definitely a lot more buyers. Rates are still low. A lot more buyers in the marketplace than there are houses to sell. The next couple months should be pretty strong. Typically, things start to slow down August, when school gets started. You're going to see that end of summer to, fall, winter slow down a little bit before they ramp up again, most likely at the beginning of the year. And then the rental market is also having a huge play on that. Rental market's 10 to 15% year over year, growth, and that's not going to slow down anytime soon. So people looking for a great investment, buying an investment property that you can hold on to, whether it's multifamily, inexpensive single family home, not only for that growth, but that residual income coming in on a monthly basis as well.
Yeah, and a whole other thing, conversation on the rental market. It'll be interesting to see how all that stuff plays out with the rentals and landlord laws and all of that.
Absolutely.
So with your buyers, I want to step back a second because you'd mentioned right now you have pending. I mean, you got 20 sellers, you got 20, or you got 10 buyers, 10 sellers. And your buyers, what is your average buyer doing? Are they cash buyers or are they getting mortgages?
Most of them are getting mortgages. There's a couple of cash buyers in that pool, but most of them are obtaining mortgages. I have some FHA buyers, 3.5% down, some conventional at 5% down, your typical 20% down, conventional buyer, and then there's a handful of cash buyers. A couple of them international, and then a couple of them just, retiring, downsizing, selling their family home, and then paying cash for the next one.
So let's talk about the FHA and the 5% down payment buyers, because it's really challenging for buyers when it says on that pre-approval letter less than 20% down. It's a whole different review process of whether they're going to stack up to the other offer. So how are you helping your buyers, those buyers especially that are lower down payment, win?
Yeah, well, and it's tough. They're not always going to win.
Yes.
You're not always going to win those battles. So I think it's having a good realtor on your side who's going to be really upfront and honest with you. You probably aren't going to compete for those brand new houses that are first weekend on market that are going to review offers in 3 days. You almost have to go over the ones that have been cherry picked a little bit, or the reason they didn't make it past. Maybe they were slightly overpriced that first week on the market and didn't sell. So you're waiting for that next week for them to come back around, and you're still paying a stronger price. Short inspection contingencies if you don't waive them altogether. Being fully underwritten. I know I've talked several times about having a full underwriting process, which makes you much more competitive, similar to a cash offer. Only then needing to find your house, order the appraisal, plug that in the system, and go to closing. That's going to put them in the most competitive position. But you're probably not going to get those houses that are first weekend on the market because you are most likely bidding up. That they're doing an offer review period for a reason, and that is to collect offers. To take the most favorable and strongest offers that'll benefit them. So with that being said, you just have to do a good job being really honest. They get discouraged. But you have to explain that process and be really honest with them up front. They can write 2, 3, 5, 10 offers sometimes before they get it. The only other alternative is, trying to pay rent and save up, 20% down, which is almost impossible.
Exactly.
So you kind of just have to jump into the market.
The interest rates.
And interest rates rising. It's just it's a double-edged sword. So with those guys too, and the other thing too, even if you escalate, because sometimes the buyers will be like, well, I'll offer 10% more. Well, with a 3 to 5% down, you may run into appraisal issues. Very typically. And so no seller is going to take an offer that's inflated 10% when you're only putting 3% down, not having very much skin in the game, to take the risk of it appraising low. And most likely they don't have the additional money to make up the difference in the appraisal from list price to appraised price, or else they'd be putting it down in their down payment to begin with. Makes sense. So that makes it a little bit challenging. So sometimes we have to shop the stuff that's already been picked over.
So really looking at the market and like you said, that they're educated and understand what they're dealing with, and they've got to stick with it.
Absolutely.
And look for those right houses out there. So how many months supply locally versus nationally, Pierce and Snohomish County?
Oh gosh, we're under 1 month supply in the east side and probably under a 2 month supply in Snohomish and Pierce County currently.
So basically for the listeners, what that means is if nobody else lists their house, the houses are going to be literally, there would be no other houses to sell.
Probably crazy. Even less than 2 weeks, I would imagine, the Seattle east side right now.
Wow. So Kim, how does our Seattle east side current job market drive the market, and do you anticipate that with this the leveling off anytime soon, and will it stay strong in the foreseeable future? What's your forecast?
I do think it's going to stay strong. We've got a lot of growth with Amazon, Microsoft, Google, eBay, Boeing, Costco. I mean, there's just so much growth in our job sector, and it does not appear to be slowing down. A lot of new businesses moving to downtown Bellevue, downtown Seattle, and it doesn't, the forecast looks great economically for our region. Therefore, that's bringing in an influx of both not only, buyers throughout the country with people moving for jobs here from California and other parts of the country. You also have the influx from China and India kind of in our tech sectors as well that are, adding to that as well. So the job market, I think, is going to stay strong. Therefore, that kind of drives our housing market and prices. And a lot of those tech jobs really have high expectations for their kids' education and their the schools that they attend, which really makes it a big draw for the East Side because the East Side schools are much stronger than most in the state.
What are you seeing with the foreign buyers? Are you seeing that that's slowing down a little bit?
Maybe a little. Last year, it was responsible for at least 25% of all of our sales, especially in Bellevue.
Yes, yeah. So what do you think the reason that we have seen a little bit of a slowdown?
I've been so busy, I haven't put a ton of thought to it, to be honest with you. I'm so busy working on everything else. Yeah. But, I don't know. Sometimes it starts to get a little price prohibitive. I sold one, I think I told you in an earlier show, $1,950,000 in Lakemont, and it's been vacant since September. So, and they live in China. Yeah. And so they just recently called me to see if I wanted to help them put it on the market just as a rental, just because they haven't been back as often as they would like to. But literally for 9 months, it's been sitting in a $2 million rental in Lakewood.
Yeah. Well, and I know there's a lot of them that do that. They don't. And what their attorneys are telling them is that the lawsuits of having somebody in the property is a bigger risk than actually just leaving the home vacant. That's craziness to me.
I know. And sitting there with the appreciation and the taxes and everything else.
Or, whatever that is.
It's crazy.
Yeah. So the advantages of sellers and, selling right now in this hot market, and how are you really helping your sellers maximize that bottom line profit to them?
Absolutely. So I just had a gentleman in Redmond. I listed his house a couple days ago. We listed it for $525,000, and we knew we'd probably get about $575,000, $600,000 for it. It was an older house. He'd been there 40 years, original owner. 1,500 square feet, nothing fancy, everything original inside. We ended up selling it for $690,000. We listed it for $525,000, $165,000 over the list price. We had 8 offers, several cash offers. We didn't end up taking the highest offer at $690,000. We did take $660,000 cash offer with $100,000 non-refundable earnest money released to my seller immediately.
That's crazy.
It's insane on a $525,000 starting list price. Wow. So it's the cautious balance of not overpricing the house. Everybody thinks because the market is so quote unquote hot that they can really extend to the outer limit of what their house may be worth and still get multiple offers. Yeah. So I try to educate my sellers to keep that 3 to 5% cushion off of maybe what the max would be. Let the market drive your price versus going out too high.
Yes.
And then you run the risk of not getting the offers and then having to come down, and then you've lost your momentum.
Yeah.
So there's a balance.
It is, regardless of what market it is, it's all about that price. High market, buyer's market, seller's market.
Absolutely.
It doesn't matter. So to wrap up our time here, we talked a little bit about your buyers, but what are you doing personally yourself? Because you've got such a great way to get out there and really represent your buyers and your sellers. But for my buyers that are listening and they're really challenged, having challenges with this market, what are you doing to help them win right now in this hot market?
Absolutely. I would first put them in touch with a great mortgage broker like yourself.
Thank you.
So you're welcome. So because you need to get pre-qualified, you need a great lender. You're only as good. That paper is not any good if you don't have a great lender backing you. So I would get pre-qualified. I would not just get pre-qualified. I would be pre-approved, fully underwritten. Yeah, full underwriting. That's the first step. You need to really be rock solid there. Have your systems in place. Make sure your earnest money is in position that you can close quickly. Have a great inspector in your back pocket if you decide to do an inspection, a quick closing. Just try to make it as bump free as possible. And if you have the opportunity, just really educate yourself to the market, the prices, what things are listing for to selling for, so you're realistic of what you're walking into.
Yeah, great advice. So if you're listening out there and you're thinking of getting in the market, a little bit scared because all the crazy hot stuff going on out there, I've got a great real estate representative, professional right here in studio. So give the show a call, 1-855-400-1150. And Kim, thank you so much for coming in studio. It's always a pleasure to have you here.
Thank you for having me.
Coming up next on the Money Hour, business succession planning using life and disability insurance. I have Dennis Yamasaki with Affirmative Financial Services right here at 1150 AM KKNW after the short break.
Are you tired of wasting your hard-earned dollars on rent to pay off someone else's home and at the same time losing out on the tax benefits in the process? Kim Frazier with John L. Scott has assisted over 800 individuals and families just like yours in obtaining the dream of home ownership. Kim has been practicing real estate since 2002 and is recognized in the top 1% of all real estate brokers. Kim is well equipped to assist you whether you are a first-time buyer or a move-up buyer looking to achieve your real estate goals.
Hi, I'm Kim Frazier, and I would love to assist you with your real estate needs. Please feel free to call me at 425-209-5638, or you can find me online at KimberlyFrazier.com.
How did you feel when your retirement funds shrunk during the 2008 recession? and the dot-com recession. Are you concerned that you won't have enough money for retirement? How about funding your long-term care needs? When the next recession comes, will you be satisfied with your current investment strategies? Dennis Yamasaki from Affirmative Financial Services helps friendly people realize a better lifestyle in their retirement. By offering a recession-proofing program that has offensive strategies, providing competitive growth during market upswings, and defensive strategies that provide downside protection in market downswings, you'll have steadier gains, less stress, and more security during your retirement. Future returns cannot be promised, and there is always a risk to lose money in bond and stock market instruments. To learn more, call Dennis today at Affirmative Financial Services, 206-817-5239.
Hi, this is Dennis Yamasaki from Affirmative Financial Services. If you'd like to contact me about recession-proofing your retirement funds, please give me a call at 206-817-5239.
You're listening to The Money Hour with your host, Tina Mitchell, on Alternative Talk, AM 1150. Now, back to the show with local mortgage and finance expert, Tina Mitchell.
Welcome back to the Money Hour with your host and mortgage expert, Tina Mitchell, right here on 1150 AM KKNW, the Saturday, June 17th show. I've built a network of industry professionals every week sharing their knowledge and expertise with my listener. Right now in studio, I have Dennis Yamasaki with Affirmative Financial Services, and we're going to have a conversation about business succession planning using life and disability insurance. Dennis, thank you for joining me back in studio.
Thank you very much for inviting me.
And Dennis graduated from the University of Washington Business School, focused on information systems and finance. He is licensed for a life, disability, health, long-term care, Medicare, and has a Series 65 license as an independent advisor. Dennis is a well-respected financial strategist. He takes pride in continually searching for out-of-the-box solutions that will better serve his clients' needs. His strategy in wealth building have historically prevented or maximized the tremendous losses during the Great Recession of 2008 and the dot-com recession for the late 2000 through 2002. The power of not losing money is often more powerful than only focusing on the investments and gains. Dennis started his career as a financial strategist in 2008, where he learned many great strategies to recession-proof people's retirement nest. And it's a great conversation, really focused on businesses and planning for that and how they can use life and disability insurance. And I want to do a little summary here that you gave me, Dennis, that all businesses need a succession plan or buy-sell agreement for their businesses. Whether you plan to work until you pass away or if you plan to sell your business, you still need a succession plan. When you plan by default, which is no planning, the worst outcome is guaranteed. Even the IRS will take full advantage of planning by default, and part of the succession plan is to use of life insurance and disability insurance. A full succession plan needs to be done with an expertise of an attorney, insurance agent, broker, financial planner, business broker, tax expert, and perhaps other professional consultants. So I'm bringing in expertise of the insurance broker and financial planner to the show today, and a team of professionals that will introduce everything that is needed. So Dennis, from an insurance broker pilot of view, from an insurance broker point of view, what is the most critical issue of business succession planning?
Well, death. Once a business owner or a key executive passes away, the value of the business immediately declines. Mm-hmm. Part of this is because of client uncertainty, and a lot of this is actually because the business owner has a lot of great relationships and a lot of great expertise, and that's going to be lost. So replacing the expertise will take a lot of time and resources, and the revenues will likely decline because of the uncertainty. And so they need the time to go ahead and replace this person. So life insurance will provide the necessary cash for the company to weather the storm. And so here's a kind of a scenario. If you're a business partner mm-hmm. and your partner actually passes away prematurely, then the partner's spouse and perhaps children will inherit that portion of the business. Mm-hmm. And so are you prepared to have the spouse or the children be your partner?
Sure.
And will they have the expertise and the personality to be able
Most
to handle the business?
Most likely not.
Right,
mm-hmm.
Exactly. So very challenging situation. So having the funds to buy out the surviving spouse and providing this succession plan contract will help get the company through this tough time.
So, Dennis, can you share any other examples of the purpose of the life insurance and how that can provide resolve?
Absolutely. So first, life insurance can provide cash liquidity for the business to temporarily survive while finding a new executive and replacing the deceased person. How great would it be for the company if their revenues temporarily decline, but they still have the financial security of the influx of cash from the life insurance policy to sustain the business. And so that security will buy them time to replace the deceased and rebuild their revenue and income.
So, Dennis, if one of the business owners prematurely passes, wouldn't you see that a lot of the employees make the decision to leave the company?
Yes, the employee's future will become uncertain, and they potentially will seek out new employment and maybe even find employment with a competitor. So that'd be pretty disastrous.
Yeah. So, Dennis, are there other benefits of using life insurance for a business owner?
Actually, I want to stay on this topic one more time
Okay.
because there's a concept of the stay bonus. And the stay bonus will be providing a life insurance policy for the key employee if the owner passes away. So that provides them incentive to stay. And so the company will pay for the life insurance policy for a period, maybe 10 years.
So another benefit of making sure that they have that so their employees actually do stay instead of leaving to the competitors.
Right on.
Yeah, makes sense.
Yeah.
So what about other benefits that it provides for the business owner?
Okay, so we're looking at newer life insurance policies. They actually have living benefits now. So part of the death benefit can be used for long-term care, which is really incredible. And so this will help, with business owner with providing assets for their long-term care expenses, right? They won't have to liquidate their other assets to provide or maybe even qualify for Medicaid, which is kind of not the place where business owners want to go. And so, if you're having to liquidate your 401k money to pay for your long-term care, that's really not a great way to go either. So the life insurance can help there. It's really awesome. Coupling life insurance in a elder care trust is really powerful because you can use the protection care services through their serious illness and provide for the care of the surviving spouse also. So an example is while you're healthy, you can actually decide what you want to do for your long-term care and what you don't want to do and have those decisions protected and funded through the trust. And so one other benefit is that you can also use this trust to help prevent other people from taking advantage of you as you get older.
Yeah, got it. So we talked about the beneficiaries and ones that may not be the most likely to want to have that responsibility for. So what about that?
Yes. So you can use this trust also to provide specific controls to divide up assets equitably amongst all the children, and perhaps with the rules, because maybe you have that child that's wild and crazy, and they would take the inheritance and buy a crazy, wild, fast sports car with all the money. And so you might set up rules so that they can have a monthly payment or a yearly payment.
Got it.
Or you can even make it a little bit more strict and say that maybe they have to quit their alcohol or drugs if they use them and things like that. So very powerful.
Yeah. And what about that one child that really does have the interest to come in and take over the business? How does that play in?
Yeah, so if you have maybe 3 kids and only one child is really interested in taking over the business, then you can use the life insurance to provide proceeds to the other children to balance out the assets.
Yeah.
And likely all the assets for the family is tied up in the business. And so if that one child gets everything, then that's going to create a problem for the other children, right?
Yes. So it's a really great resource to put the plan together exactly what you want to happen. It protects the other partners to know if for some reason one of them passes, that they're protected, and everything is just really laid out and covered in that life policy, insurance policy. So how does disability of the business owner or partner impact the company?
Yeah, so people typically have according to industry stats, there's an 80% probability that someone will become long-term disabled during their working career. And so when you become disabled, the company will actually feel responsible to pay your salary, right?
Sure, of course.
They don't want to leave you out in the cold.
Course.
And you need to find a replacement or a temporary replacement. And so when you find that person, you will be paying their salary and you'll be paying the owner's salary. And so wouldn't it be great to have that?
Doubled up on salary.
Yeah. So wouldn't it be great to have that disability insurance policy to at least pay a good portion of the owner's problem.
Yeah. So what if the company has outstanding business loans? How can a policy like this help?
Yeah, that's a great question because, you have obligations to your debtors, and you can use some of the proceeds from the disability policy to actually pay for the debt payments. And that can be a pretty awesome thing for the company, too.
Yeah. So everybody likes stories, my listeners especially. So any stories that you have that you can share on with disability insurance?
Yeah, I have a real good fishing buddy who had the insight to purchase a disability policy when he was young. He's a dentist, and unfortunately, he found that his vertigo condition prevented him from bending over to actually work on his patients. And so he was able to collect his disability policy. And his policy was kind of cool because it was based on his particular industry as being a dentist.
Yeah.
And so now he's working in another profession as a consultant, making money, right? But he's still collecting his disability policy payments.
Yeah.
So
you got to make sure that
doubling
that's
up on your
covered.
income.
Yeah. So you can really put the strategy in there to make sure that you're really covered. And that's really what it's all about. I mean, if you got something that with the use of your hands and something was going to happen, but you're fine in other areas, so it makes total sense. What do you find with your companies that you work with, Dennis? Because I know that you represent a lot of companies and really helping them strategize based on what's best to suit what they need. And really, that's what any insurance is about. Anything else that we do with our finances and what the show is all about is really on an individual basis. There's a lot of planning, and each is going to be unique to their situation. So when you're meeting with those business professionals, how many you're finding that really, don't have something like this in place, and that you're able to come in and fill this gap for them?
In reality, almost no one really has a full succession plan.
Yeah, that's scary.
And it's really quite scary. It's quite amazing, and it takes an education process to get them to
that was going to be my next question. If you educate them on exactly what we're talking about, you would imagine that a high percentage would see the benefit of how this can really protect their company.
Right.
And protect them if something happens.
Right. And it takes a lot of work to do this.
It's just like in life.
It takes a lot of momentum to get them there, and it takes a lot of momentum for them to talk to their attorney and talk to the other professionals, business valuation experts.
Yeah, so if you're a call to action and you're a business owner, definitely give the show a call. Make sure that you have your resources, your experts in line that can really help you navigate through that process and find the best plan to protect you, protect the partners, your employees, and everything about that business, because you work really hard to get it together. You want to make sure that you keep it safe.
Most definitely.
So, Dennis, when you sell the business, what about capital gain taxes?
Yeah, so capital gains taxes, when you sell the business, you have to pay the taxes, and you have to pay the taxes also on any assets. And so proceeds from cash value life insurance can actually be taken out tax-free from the policy and used to pay those kind of taxes, which is really awesome. And, if you're still making a lot of money, you can pay that money back into the life insurance policy if you want to. However, you can just take the loan off the policy and pay the taxes. And any remaining amount that you have that's in the policy for your cash value, you can use for an income stream, a tax-free retirement income stream.
Well, I was
really
just going to say, what about tax-free? I mean, I know there's a lot of protection in taxes with these policies.
And an awesome read for people to take a look at is Patrick Kelly's book, Tax-Free Retirement.
Okay. All right.
Yeah.
So, Dennis, as we're wrapping the show up here, what would be your final words of wisdom to any of my business owners out there, or any individual?
Yeah. So I presume that people can see that life insurance and disability insurance is very powerful, and it can provide an awesome instrument for them to provide so many benefits for the company and provide this financial security that they need in their succession plan. And so I would recommend that they take the time to build their succession plan today, not wait, because if you plan by default, then, the worst things are really going to happen.
Yeah. Thank you, Dennis. I really appreciate you coming in, and it's great to have a conversation specifically for those business owners and how to, to protect their company.
Yes. Thank you very much, Tina.
And coming up next on the Money Hour, how can you improve the health of your finances? Dr. Kavrin Chepnik with Amen Clinic Northwest, investing in brain health, right here at 1150 AM KKNW after this short break.
How did you feel when your retirement funds shrunk during the 2008 recession? and the dot-com recession. Are you concerned that you won't have enough money for retirement? How about funding your long-term care needs? When the next recession comes, will you be satisfied with your current investment strategies? Dennis Yamasaki from Affirmative Financial Services helps friendly people realize a better lifestyle in their retirement. By offering a recession-proofing program that has offensive strategies, providing competitive growth during market upswings, and defensive strategies that provide downside protection in market downswings, you'll have steadier gains, less stress, and more security during your retirement. Future returns cannot be promised, and there is always a risk to lose money in bond and stock market instruments. To learn more, call Dennis today at Affirmative Financial Services, 206-817-5239.
Hi, this is Dennis Yamasaki from Affirmative Financial Services. If you'd like to contact me about recession-proofing your retirement funds, please give me a call at 206-817-5239.
Isn't it time to get the right answers? Whether you or a loved one struggle with ADD, attention, depression, mood problems, autism, addictions, weight, memory loss and dementia, learning or behavioral problems, we can help. We at the Amen Clinics specialize in powerful brain imaging called SPECT that when combined with detailed clinical histories, cognitive testing, and often lab work paints a clear picture of your brain. Additionally, we are committed to using the least toxic, most effective means at our disposal. We call this the Amen Clinics method. The Amen Clinics method allows us to look at your brain patterns and treat conditions based on your specific brain type. What we've discovered from our over 115,000 brain scans is that imaging changes everything. There's not just one type of depression, ADD, or addiction. They all have multiple types. The imaging, in the context of all we do, allows us to target treatment specifically to your brain. This is Dr. Cabran Chapik at the Amen Clinics Northwest in Bellevue, Washington, and we want to help you find the right answers. Visit amenclinics.com or call 855-400-9136 to learn more and speak with a patient care coordinator today.
You're listening to The Money Hour with your host, Tina Mitchell, on Alternative Talk, AM 1150. Now, back to the show with local mortgage and finance expert, Tina Mitchell.
Welcome back to the Money Hour with your host and mortgage expert Tina Mitchell right here on 1150 AM KKNW, the Saturday, June 17th show. I'm here to empower our community, providing you with opportunities and solutions when it comes to your money. If you're hearing my show at a different time or day, you are listening to a rebroadcast. You can call the show at 1-855-400-1150. Again, that's 1-855-400-1150 or online at themoneyhour.com to discuss anything regarding money with the guests I have in studio today or anything that you want to chat with your host, myself, about. And in studio right now, having a conversation with Dr. Cabran Chapik with Amen Clinic Northwest. How can investing in brain health improve the health of your finances? Dr. Chapik, thank you so much for joining me back in studio. It's always a different spin. The show is called The Money Hour. It's all about money and how to make more money, save more money, have a better quality of life for my listeners, as well as extending to their family. And so it's just an interesting topic and a spin bringing in. I really appreciate you joining me in studio.
Thanks for having me, Tina.
And a little bit about Dr. Chapik, a licensed naturopathic physician, studied human biology at the University of Kansas, followed by naturopathic medicine at Bastyr University in Kenmore, Washington. With an interest in the mental health care field, he received his clinical psychiatric experience from 2007 to 2013 while treating patients with severe mental illness in the partial hospital program as part of the multidisciplinary team. So, Dr. Chapik, I want to just start out and share with my listeners, how does work at the Amen Clinic, working with patients with different mental health and neurologic conditions, relate to finances and investments?
Mm-hmm. I'm so glad to be here because, brains run the world. Mm-hmm. And when you're thinking about finances, it really comes down to the decisions that you make in the moment. And so you have to have all your mental faculties firing on all cylinders, be able to make a good decision, right? And so if your brain isn't working well, you're going to have a harder time making good decisions in the moment when it really counts, when it really matters.
And that makes total sense when you think about it. It's, everything that we do can be attached to the health of our brain. And obviously things that take such brain thought is such as financings could make a big impact. So let's talk about which part of the brain is involved in financial decision making.
Yeah, so the frontal lobe, right behind your forehead, is the part involved in decision making, focus, concentration, which we need. You're reading through contracts, you're trying to put all the pieces together. And then your temporal lobes, which are right behind your temples, are your memory centers involved in remembering all those facts and information that you've been reading about and thinking about. You have to pull up to make a good decision. So it all really uses your whole brain in summary. And then there's parts of your brain that can get in the way of decision making. So they're part of the brain, kind of the old brain, the reptilian brain that's associated with survival, the limbic system. And if it's fired up, if you're fearful and anxious, it's hard to make good decisions, or you make decisions based on fear, which is not always good in finances because you want to be able to sometimes take risks. And if you're very fearful, you're not going to be able to take risks. You need to take those opportunities when they're in front of you. So reducing fear helps make good decisions.
Makes total sense. And I talk a lot about the adrenaline as well, and understanding the adrenaline that we have and using it to your benefit versus allowing it to take you down. And I would imagine, could be the same thing. So Dr. Cheptic, when it's talk about common brain problems, with your top executives that you work with, I have a lot of business owners that listen to the show. And so what are those common brain problems that you're seeing?
I'll say 1 in 4 top executives or managers have some kind of mood disorder, depression, anxiety, or learning disorder like ADD or dyslexia. It's really, really common. Some use it to their advantage, like Richard Branson of Virgin America has dyslexia. Peter Knight from Check Free has ADD. And they were, Richard Knight, he said, I'm either going to start my own company or I won't be able to do anything. I know I can't work for someone else because these folks, if you have ADD, your frontal lobe is more open, not able to focus. You can kind of imagine someone in a whirlwind with papers flying, but they've got these brilliant ideas and they're creative problem solvers. And they always have a really good type A executive that keeps them online, keeps them in track and organized. And so they've figured out ways to make it work. But many others have a lot of difficulty with depression and anxiety. And a lot of folks in the workforce have these issues and really need help, but may not realize it.
And I want to go back to what you first said, because another thing I always talk about is embracing your strengths and hiring out your weaknesses. So if you've got a challenge with your health and things that are there, finding out the best qualities that you have and being able to shine. And just with the people that you mentioned, look what they've been able to accomplish, even though they have some challenges in those areas.
Exactly.
So with the growing number of people with Alzheimer's, isn't it better to just wait until you can't remember your own name and so you don't have to live in fear?
This is a hot topic, and I'm really excited to talk with you about it. Since I was on last year, there's been a lot of development, and we've figured out a lot about Alzheimer's. And I mean, if we just think about financial, right now, there's 5.3 million Americans with Alzheimer's disease. By 2050, that number is going to triple. That's going to bankrupt Medicare, first of all. It's this third leading cause of death behind heart disease and cancer now. And so it's growing, and currently there's no treatment. There's even no way to prevent it, according to the current conventional literature and scientists and doctors. However, a neurologist out of UCLA who's just been in the lab for 27 years trying to research and figure out cures for Alzheimer's and dementia. He has come upon a program that he's been able to show reverses cognitive decline and reverses memory problems in folks who are headed towards Alzheimer's in 9 out of 10 patients that he did this small study for. 6 had to quit working, and they were able to go back to work.
Wow.
And so we've teamed up with him as part of the Amen clinics. We use SPECT imaging to assess the brain and then use these types of functional protocols to help improve folks with Alzheimer's, and especially early on. If there's signs of memory problems, that's when you want to address it and tackle it.
Yeah, and everything else, when I talk with experts in all arenas when it comes towards with money, estate planning, your CPA, and everything that you do, procrastination is something common when it comes to finances. And I think procrastination comes with anything that can be a fearful thing or something that you're trying to avoid or pretend that it's not there. And I would imagine that when it comes to things with our brain and keeping it healthy, not procrastinating, doing exercises and things that can help strengthen that would be a high benefit.
The more proactive you can be, the better. Especially with Alzheimer's, the earlier you do something, then we can turn that ship. It's like a Titanic that's going. You can do things like exercise, diet, nutrition. You get a lot of mileage out of those lifestyle changes before you have to go to psychiatric medications and things that sometimes even aren't that helpful in Alzheimer's disease.
Yeah. So what sort of financial investment is there in the early diagnosis of Alzheimer's?
The Genworth Financial Survey shows that you can save about $1 million over 10 years. Now, that's based on the cost of care in assisted living. So if you have a late diagnosis, you're going to pay more. So it's about $500,000 if you get an earlier diagnosis with assisted care. But I would like to see, folks get assessed way before that. With SPECT imaging, you can detect changes 5 to 9 years before symptoms even begin to occur. So you start having memory problems. That's a concern you want to check out with your doctor.
Yes.
You want to get it assessed.
So what can you do to protect your brain as you age, ultimately, hopefully protecting from Alzheimer's?
Yeah. What we've seen is the things that we know we should be doing. We should be exercising, getting 7.5 to 8 hours of sleep every night, checking your important numbers, especially blood sugar. Type 3 diabetes is what it's called, is insulin resistance in the brain. And so checking that and controlling that, sometimes doing like intermittent fasting, where you stop eating after 7, you don't eat till 7 a.m. the next morning. It's not like fasting for days, it's just throughout the night, 12 hours with no food, resets the insulin receptors. Doing things like brain games. So, we think about exercise for the body. You want to exercise the brain as well. It doesn't have to be Lumosity, or My Brain Fit Life is another good one. You can play cards. You can challenge yourself, try to remember that grocery list and hold things in mind. And I think this is something that eventually we're all going to be into is brain exercise.
So kind of like you talked about fitness. I mean, we all know that we need to work out to stay fit. We're watching what we're eating to keep healthy. Same thing with our brain. So if I'm hearing you correctly, I mean, hopefully it'll be more common that anybody that even might not think that they're at risk of Alzheimer or some type of brain issue in just having a healthy brain, which is ultimately going to help you be smarter, which is going to help us in everything we do with our finances.
Oh, yes.
Yes. So, Dr. Chapta, what can you do if you suspect that one of your loved ones has some memory problems?
You want to tell them that there's hope, that we don't want to ignore that. We want to address it, and it may be something that we can improve. And so you want to, have them come to the Amen clinics for assessment or see their local doctor. And they can do an in-office examination, a brief test, mini mental status exam. There's the MOCA. There's all these different tests that can be done, and it can detect early signs, and then know that there are things that they can do. Okay. And what is your website at Amen Clinic? What's the best way to reach out to you? www.amenclinic.com, and we're at Amen Clinics Northwest in Bellevue. Okay. So if you're listening to the show right now, you can always go to the Money Hour site as well to get connected with Dr. Chapta and the Amen Clinic. But just going in and getting finding out where you're at and things that you can do to train your brain and to get it to maximize what it can do for us. Yes. So what are some simple ways that you can improve memory and keep sharp in your age? I mean, I know for myself memorizing names sometimes can be challenging. And I know that there's exercises and things that I should be doing as well. So what are some of those simple techniques that you can share? I'd say that being sure to keep your stress levels low. and exercise. And the way to do that is exercise. You flush out those stress hormones. You make sure your blood sugar is balanced by having protein at each meal and having healthy fats at each meal, avocados, coconut oil, things like this. So if you have a healthy physiology, you're set up to have a better memory and better focus. That's especially true for focus. And then there are supplements that can be taken, actually, that can help with memory. One is called phosphatidylserine. It's a mouthful.
I was going to say that's a mouthful. I won't repeat it.
PS for short. And it's part of cell membranes, and it has been shown to help with memory in several studies at 300 milligrams. So there are a number of supplements. Fish oil, very helpful for focus, for mood.
I've heard that.
Decreases brain inflammation. So the work of Dr. Del Bredesen has shown that what you need to do is look at all of these factors and put them together. So it's not just one thing, but all of the research that's been done, if we put all of these pieces together, that's where we see improvement for brain function, for ADD, for depression, for Alzheimer's.
So I've got a minute, and I've got to take us to a break. A call to action for anybody that's listening to the show right now. What should they be doing?
You can change your brain. You can make it better today. You don't have to wait. And so I would encourage you to pick up the phone, call us for help, or just put on those running shoes and get out and exercise and start doing something for the health of your brain, because you'll be happier, wiser, your relationships will be better, and you'll have better success in work and school.
Dr. Chaptik, thank you so much for coming back in studio, and look forward to having you back again soon.
It's my pleasure to be here.
And signing off for the day, this is your host and mortgage expert, Tina Mitchell. Enjoy your Sunday and the rest of your weekend. I look forward to being here same time.
Tina Mitchell, MLO 145420, is a licensed loan originator with Gateway Mortgage Group, LLC. The views expressed by the speakers on the preceding program are those of the speakers and do not necessarily reflect the views of Gateway Mortgage Group, LLC, nor are they necessarily endorsed by Gateway Mortgage Group, LLC.